Let's go, baby. We are seeing this huge bounce in AMC stock, close up the day 6.37%, in after hours up 2.67%. That is almost 10% for the day. So first and foremost, congratulations to any ape that held through the hard times, specifically even hitting $38.76 for the day, now up about $12.50 from the low we did see for the day. Now, we need to go over all the data you guys need to know about, but specifically the divergence I do see, whereas AMC stock is going up and the overall stock market is going down, and give you guys my theory about this double-edged sword, give you guys some news from China that really sets this thing home, as well as the news from Wells Fargo that they are shutting down personal lines of credit. Also going to go over the Ortex data, Stocko tracker data, do some technical analysis because it looks beautiful for a continued breakout. So there's a lot we have to go over in this video. I don't want to waste any time getting into it. The only thing that I ask is that you hit that like button and help push this video out to even more apes, as well as consider subscribing to the channel. Now, getting right into the video, guys, I don't want to sugarcoat shit. Let's get into the big news and this divergence that I do see happening with AMC stock. And the biggest part of this news that actually came out today that sent the stock market as a whole down about 2% on the S&P 500 at the lowest point, which also sent AMC stock skyrocketing, is this news that the China cabinet says it will use RRR cuts to support the real economy. Now, what they are doing here is cutting the reserve requirement ratio, the RRR, to support the real economy, especially small firms, the cabinet said on Wednesday. Something else I want to point out of this article, he says there is room to cut reserve requirements, which will help release long-term funds and encourage banks to lower financing costs. Now, why this is so important is because China is the second largest economy, and if something happens in China or something happens in America, you tend to see effects on both sides, and specifically in the stock market, because a lot of Chinese people, or just people around the world in general, they invest in the American stock market because this is seen as the most, or not most safest, but the safest investment you could make to have your money grow for you. Now, I do want to draw your guys' attention to the times that China has actually cut interest rates. Now, they did this about 3 times in 2019, and if you guys go to the S&P chart, you can see in 2019 you've seen one crash right here that was about a 15% decline, another one that was about 10% decline when they did start cutting rates. Now, how this plays into the whole double-edged sword effect that I have been talking about on this channel for quite a long time, it is simply the fact of these hedge funds and institutions, they have positions in a lot of different companies. They might have short positions in AMC, but they also own long-term stocks. Now, once you see the stock market going down, those long-term stocks, which act as collateral to stay in short positions, they start to go down. So they are losing on this side. But when you see AMC diverging the market and going up, they're also losing on their short positions. And odds are they're going to sell out and cover their short positions. Obviously have to sell some long-term stocks to do so, but they are more inclined to cover those short positions because, especially when it does come to AMC, we are the stock and we are relentless and ruthless. We are not selling out. We are crushing the hedgies. They know this. They don't want to be on the losing end of that trade. There's not too much they can do as far as the overall market selling off, but they have the ultimate say-so when they get out of their short positions in AMC and when they do cut their losses. So you're having this two-edged sword effect that is making shorts lose on both sides of their portfolio. So that is going to be huge, and that is the simple reason why I think, one, we're going to see a crash or correction in the stock market within the next coming weeks, but you're also going to see a lot of shorts that start to cover their short positions. But also, just to top all this off, we have Wells Fargo coming out and telling customers they are shuttering all personal lines of credit. They said the product, which typically gave users $3,000 to $100,000 in revolving credit lines, was pitched as a way to consolidate higher interest credit card debt, pay for home renovations, and avoid overdraft fees on linked checking accounts. And for you guys that don't know, Wells Fargo is seen as one of the riskiest bank investments you can make as an investor because they hold a lot of their loans on their balance sheet. Now, what happens when you buy a house or get a loan for something? Those loans are usually sold out to third parties, so the bank don't hold them on their balance sheet. They basically flip your loan, make quick profit, get it off their balance sheet, and don't have to worry about it. If you default, that is where you do see a lot of creditors coming after you and not usually the bank. Now, What specifically this is telling us is these over-leveraged hedge funds, institutions, and even regular people, they don't want to take the fall for these people being so highly over-leveraged. And it's not a surprise Wells Fargo is the first bank that is coming out to do this. And they have even said, one analyst for the bank said they expect a 5% correction in the S&P 500 before this upcoming earnings season does start. And this upcoming earnings season is going to really kick off in about 2 weeks time. So this, with all these other factors, I do think will lead to a lot of shorts covering their short position. So this is, like I said, a big red flag that a lot of people are over leveraged, and you can expect this is actually happening behind the scenes, and they are trying to de-risk their whole portfolio along with other banks alike. Now let's get into the ortex data, guys, and this is not reflecting the move that we have seen today. We will have to wait for the T+2 settlement time. So come Monday, we should see what did happen for today, and that'll be very important to see if a lot of shorts did cover their positions. This is not counting naked short sellers, and the fact that AMC is on the threshold securities list, this is something I have to point out. You're gonna see some of these naked shorted shares that are actually being covered and bought back. So this may play a role in part what the move we did see today, but I don't necessarily think that is the case, because a lot of people fail to realize in the SEC 206 section of the naked short selling laws and requirements, they actually have 35 days to cover naked short positions that failed to deliver. It's not 13. It's not once they get on this threshold list. It's a certain time period. That's not the case. They have up to 35 days if the shares are hard to acquire and for some reason they can't get their hands on these shares. So just so you guys have that very clear, up to 35 days. So I don't think that's a huge impact, but like I said, we'll have to see the next 2 trading days, which would be on Monday, what the short data does look like for AMC stock. But as far as the ortex data for the day, we do have a short interest change of negative 1.54%, return shares 5.16 million, borrowed shares 3.64 million. So that is a borrow change of negative 1.52 million. Current short interest percentage of free flow at 18.56%. Current shares that are sold short of 94.92 million. This is still a huge number of shares that will have to be bought back. So ultimately, like we say in these videos all the time, we do dictate the price here, but we do see the share utilization going up, which does make sense, especially once AMC is bouncing so hard like it has done today, that less institutions and hedge funds are actually willing to sell these shares short to anybody. Now, so that is expected, but we are seeing the short interest go down, which is what I don't want to see. I want to see the share utilization going down as the short interest goes up, but this data will probably finalize by the end of the night, probably around 8 or 9 o'clock. So if you guys want to see a short interest update change, then let me know in the comment section. I will provide that to you guys and go over the final data for today. I do think that is important to cover, just considering the rally we did see today. But now, I do want to talk about the Stonko Tracker data and then get into the technical analysis. But first off, I want to acknowledge the fact that Citadel has not covered a single share of their shorted position. Still, almost 5.7 million shorted shares at $6.16 that they have not covered whatsoever. Jane Street Group has 4.7 million shares they have not covered. Pretty much nobody has covered their short positions as far as the larger positions in AMC stock, or shorted positions in AMC stock. So this is a clear indicator as well that we want to pay attention to if they are actually covered these shorted shares positions, larger hedge funds and institutions. Now, for the Stonko Tracker data, obviously we're going to have a lot of contracts that expire out the money come tomorrow. Some of these are going to run in the money, and that is something that I do want to point out for you guys. We have a potential not to see a full out gamma squeeze tomorrow, but we do have the potential to go up significantly. Like I said, about 10% would not be out the question, just because the fact that we went to $38 at the lowest point today and now we're almost $50, a lot of market makers did not expect that to happen. So when they are selling you a call, when you are buying a call, they are agreeing to sell you 100 shares at that strike price that you bought the call for. So if you get close to that strike price, especially on the day of expiration, once you do get, let's say, to $60, once the stock gets to $58, $59, the market makers are going to have to step in and start buying those shares to sell them to you at $60, because the market, or the house, never loses. The casino never loses. So that is what is going to be happening. That is, in a short nutshell, what a gamma squeeze is as well. But I do think your best, most likely situation to actually see a gamma squeeze is going to be July 16th, and I do think this momentum will continue, obviously tomorrow, Friday, but continue into next week as well, since we do have major catalysts for this weekend. We have that UFC fight being played in 95 AMC theaters this weekend, as well as Black Widow hitting theaters tomorrow, this Friday, and we will get those numbers for both of those events come Monday, and that could be a huge fundamental catalyst to push AMC stock up higher. But we do have in the money contracts for July 16th at 75,400, out the money contracts at 260,106 contracts. So you're gonna see some level of a gamma squeeze. I do think so myself. Other than that, you really don't see any potential for a gamma squeeze until you do get to September, and I do think September 17th will be your next biggest options expiration date. Now August 20th is starting to go up pretty significantly in out the money contracts as well as in the money contracts, but I don't think it's likely to get to these elevated levels that we're going to see for July 16th going into next week. So that is something I will be watching very, very closely. And once we do go to the option chain really quick, we are seeing a lot of contracts obviously at the $60 strike, which is going to be the case on every single option chain, but you are seeing a lot at 70, which is very different from a lot of option chains. You're seeing a lot of activity from 100 to 145, which you are on this July 16th expiration date as well, but you're seeing the second highest options activity on the $70 strike, almost 22,000 options that are held in people's brokerage accounts at this $70 strike. So if we get close to $70, you're going to definitely see a lot of delta hedging that is going on, which is just a fancy way of saying market makers are going to buy the shares to sell them to you to fulfill their end of these options contracts. So I do think you do have a high likelihood of seeing a gamma squeeze for that expiration date. Now, as far as the technical analysis, we are setting up a very strong bullish rally. I do think so myself. Just take a look at the trend line from the bottom of the day that we did see today, and I do think you're likely to see a breakout, considering we are pretty much at this level or even over this level now in after hours that we were at the highest point of today, which was $49.79. Not quite there, but we are very close to that. So if we can break out past that in this last 20 minutes of after hours trading, as well as into pre-market for tomorrow, and obviously go to about $50, you'll see a huge rally, I think, from 50 to at least 55. Now if we go to 60 tomorrow, that's gonna be a stretch, but considering we did go up almost $12 for the day, or a little bit over $12 for the day, that is possible, and that would put us at about $60. And at that point, I do think some shorts are going to be willing to get out of their short positions and cut their losses. Now, as far as other technical factors are concerned, on the 50-minute candlestick chart, we are seeing the 50-day moving average that has obviously been under the 200-day moving average, which is a death cross. We're seeing this curl up as the 200-day moving average is pretty much staying the same, which is going to happen. Now, if this 50-day moving average, if this blue line crosses above the orange line, that will be a golden cross. That is a clear sign for traders, day traders, FOMO buyers to come in and start buying the stock. Now, in after hours, we do see the MACD is pretty neutral, slightly bullish with the CCC line over the blue line, and that is what I will want to watch going into pre-market tomorrow, how big of a divergence you do see, because the MACD is very important here, guys. Once you do see the MACD actually go bullish, that is a huge sign to actually buy the stock and initiate a trade. And this actually happened. The MACD went bullish. This was in the beginning of trading today at about $38. So if you would have made a trade on this, you would have made a lot of money. But that is everything you guys need to know as traders in AMC, or even longer term investors in AMC. Now, do me one quick favor. If you liked the video, hit that like button for me, comment down below, and consider subscribing to the channel, as well as check out the link down below in the description. There is a link for public, no deposit necessary, and no need to even link a bank account. You get your free stock in about about 3 minutes time, and it is literally free money, as well as deposit $100, get 4 free stocks, each of them potentially worth up to $2,400 a piece, using the link for Webull. As well as if you guys want to start winning on your trades, join a great community and get notified in real time every single time a trade is made on AMC or any other stock. Check it out, buy and sell alerts, link down below in the description. But with all of that being said, I will see you guys in the next video.